Let's talk about that pullback in this equity market. Is it time to buy?
It is. So you hit on two very important themes just now. The first, the concept of a bit of tension, okay? The wall of worry that was almost non-existent in July as AI was leading us to the new world and then suddenly started getting rebuilt at the top is now fully rebuilt. And how do we know that? Because basically, if you look at the market yesterday, there was a very, very noticeable change when the UAW came out and lowered their offer, making the bid-offer spread 21 to 30, as opposed to that original 40. And that's when bond yields turned lower, and that's when stocks turn higher. And we think there's a lot more to go of that type of action in the fourth quarter.
So this equity call you're making is essentially a bond market call, correct?
How can it be otherwise when you look at the action in the last year and a half? The two are positively correlated. It's a new world.
I want to talk, and I'm fired up this morning because I got great and worthies running around the world spouting economics, and it just drives me absolutely nuts. Let's get back to common sense. You work for the most famous market economist in the world. Edward S. Hyman invented the game. I want to get from Ed Hyman to Julian Emanuel. What is that linkage across the Hyman predicted disinflation?
So Ed's call, again, disinflation, it has been very consistent. And what's interesting about the current environment is it's very rare that you see oil prices ratcheting higher the way they have, whereas copper prices have been going lower. That tells you that what's going on is more geopolitical than an entrenched inflation psychology. That's going to continue to unwind,
right.
Likely a slowdown, but the commonality here is when you look long term, the reason the market is likely on better footing in the fourth quarter is because earnings are going to continue to grow next year.